Hello, everyone. This is Doc Severson with episode 6 of the Ready, Set, Crypto podcast. Today's topic is another tale of the tape, where I discuss some of the more personal elements of trading, those being the characteristics, nuances, and challenges of trading financial markets that we all share. If it were easy, everyone would be successful at it, right? There are some key skills that will separate you from the pack, which is what I'm here to share with you today. I've been helping people learn to gain edge in their trading since 2005. And probably the number one question that we get here at Ready, Set, Crypto is, what should I buy? It doesn't matter whether it's crypto or stocks or options. We've been programmed over the years to focus on buying assets to hold in hopes of seeing them accumulate in value. Unfortunately, giving a one-size-fits-all answer to that question is nearly impossible. With a tip of the hat to Benicio del Toro in the movie Sicario, you're asking me how a watch works. That's really Mav's wheelhouse, doing the digging to figure out what cryptos to buy, and this is what he addresses on a daily basis in our premium newsletter. But my expertise is the number 2 question that we get, which is, when do we buy? Let's assume you've done a mind meld with Mav and have figured out what you want to add to your portfolio. Then at some point, you're going to have to figure out when to do it. And the answer to that question might be a little bit more involved than you might think. When do we buy it? For me, to guide you down this path, I'm going to ask a series of questions that will make you think a little bit more about what you're doing and why you're doing it. The first of these is, are you an investor or are you a trader? Well, do you know what the difference is? An investor is someone that has a truly long time horizon, the true hodlers, those that are going to ignore the short-term price fluctuations and focus on securing the best long-term cost basis for that asset. It does take a great deal of patience, dedication, and faith to be a long-term investor. Most see their first real red price bar and suddenly start to lose faith in their investment. And that's why the second group are called traders. They are looking for short-term edges to be able to take advantage of through price fluctuations. Buy low, sell high, and repeat, sometimes within the space of a day. A trader has opposite goals of an investor, since a trader wants to be out of the market and in cash, stablecoin, or reference currency the majority of the time. They are the snipers of the trading world, looking to hop a ride on a price swing and jump off before it reverses. Once again, the requirements for being an effective trader are numerous. It takes experience, it takes courage to find these opportunities that are going against the crowd for maximum edge. And it normally takes quite a bit of technical skill with charts, which might take some time to fully acquire. Now, I know what you're saying at this point, that you're sort of a hybrid, you're kind of an investor because you like to hold for the long term, but you like to sell before the price turns down again. While I do believe that there is room for different levels and degrees of each classification between investor and trader, it really requires you to think about what you're doing and commit to a path ahead of time and not to change your game in the middle of a trade when you lose your nerve. It's easy to drink the Kool-Aid and say in all of the subreddits that you're a committed hodler, while in private you missed the larger move because you puked out of your holdings at the bottom when you got scared of losing it all. Look, I get it. It's a tough business and the majority of people will make decisions that seem logical at the time to them, but in the end cost them everything. So let's get back to the original question, which is, when do you buy? And let's apply it first to investors. A true investor wants to see the price dropping for his or her desired asset. Does that sound right? Yes, it's true. Let's say you're in the market for a car. You look it up online and you see it's going for $20,000, which you think is too high. So you wait. Lo and behold, a week later, the price is down to $15,000 due to smaller demand for that car. As the weeks go by, you see it going lower and lower, and the price of the car eventually hits $6,000, and you decide to step in and buy it. You'd be pretty happy with yourself, right? On a side note, Wouldn't it be great if new automobile pricing had this kind of price elasticity? You as a patient investor felt that the price was overvalued at $20,000, yet determined ahead of time that the right value for that car was $6,000. Someone newer to the business of buying that car might have panicked and bought in at the $20,000 price, convinced that it would immediately go higher. There's another way that you could have bought that car as a patient investor, which is dollar cost averaging. Every month you're going to contribute the same amount towards that car, and if the price drops, you end up owning a bigger percentage of that car that month until it's paid for and you own it. An alternative way to cost average that asset is to buy partial positions on sentiment signals, such as when the price of the asset is, and I'm doing air quotes here, oversold, so you're only contributing towards the purchase of that asset when you have a statistical edge in your favor. The point that I want to make here is that true long-term investors want to see the price of their coin being discounted or dropping in the short term because it allows them to pick up more of that asset than they would have had they chased it higher, as so many did in late 2017 with the crypto markets. True investors have ignored the fear, uncertainty, and doubt overplayed by the financial media during the crypto bear of 2018, and have used it to their advantage by lowering their average cost per coin, while everyone else is bailing out and quitting near the bottom. Just to be clear, cost averaging is a losing strategy if you average down to zero, which is what some coins and tokens will be worth going forward someday. Only the strong with the best business case will survive. Start your decision by determining what you will invest in, and from there determine your best course of action for starting to own that asset at the lowest possible cost basis if you're a true investor with a long-term time horizon. But let's just say that you're not a prototypical investor type. Maybe you're up there in years and you don't have 5 or 10 years to spare to average down and wait for the eventual moonshot. Or maybe you're wired a little differently and like the action of finding edge in charts and technical analysis. Well then, you very well might be a trader. Traders are going to hold positions anywhere from minutes to weeks, but rarely longer. They view holding an asset long as risk, and the more that they're in cash or stablecoin, the safer that they are. They are the literal equivalent of a deer hunter, someone that straps themselves up in a tree for hours at a time, freezing and waiting for their game to wander into their sights. If this classification more accurately defines you, then the first question is, what is your edge? Have you identified a pattern that allows you to accurately fade herd behavior so you're able to quickly score your profits and remove your risk? Remember that price movement is a double-edged sword. Volatility giveth and volatility taketh away. Paper profits are just that until they're booked. The second question is then related to risk. What are you risking on the trade? Do you have clearly defined targets and exits? How will you know if you're wrong? And what will you do at that point to preserve your precious capital? Is it possible to define a trade structure that allows you to define risk ahead of time and relax and let it do its thing? The biggest determinant for the forward success of a trader is not necessarily how often that they're right, because everyone likes to look at batting averages and win rates. Those are really immaterial. What really counts is how much they lose when they do lose. This is where the concept of expectancy comes in and whether your net winnings are outpacing your net losers. Okay, we've come full circle now. We've started off with a high-level question of when do you buy? And we found that the answer to that basic question really comes down to you and how you're wired. If you're a patient, methodical type that sees the value in crypto peaking in the next few years and you just want to be positioned for the eventual boom, then your goal is to acquire the right assets for your portfolio at the lowest possible cost, using the bear market to your advantage. On the other hand, if you're more technically inclined and are able to spot the edge in herd sentiment, you can begin to rapidly build your account around short swings in price using technical analysis and utilizing short-term price targets. It really starts from there, and if you recognize yourself in one or both descriptions, yet don't really have your approach nailed yet, it will really pay dividends going forward for you to stop the madness right this second until you build a plan and create a more seasoned, disciplined methodology. There is a ton of information out there on the internet to assist with this for free, but be cautious before you just accept anyone's advice. We might be a little biased, but at Ready Set Crypto, we feel that we have the answers to these questions with some of the new portfolio and trading courses that are up in our store, priced at a point that anyone should be able to afford. Thanks for listening, and I'll see you folks in the next podcast.
So, I hope you enjoyed that. Thanks for sticking around. If you haven't done so already, be sure to subscribe and absolutely check out the other videos we've got on this channel. We've put a lot of work into doing cryptocurrency education the right way, and as such, we've set up a website with a free daily newsletter, a free ebook, and a free 2-hour intro course, all accessible at readysetcrypto.com. Check us out, and thanks so much for watching. Cheers.